Now, what I want to do here, this next topic is the SVB timeline, the Silicon Valley Bank timeline. This is from Thursday the 9th all the way through this past Tuesday, the 14th. And this is just going to be a brief section kind of covering how the events went down. I'm mostly going to read from this so I don't mess it up, but these are just summarized each of the days, kind of what happened, what's going on, blah, 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 blah. So let's jump straight into that. Silicon Valley Bank on Thursday the 9th, shares took a nosedive following the bank's announcement that it would raise capital by selling stocks, taking a charge to roll over and asset portfolio to higher yielding assets and extending its term borrowing capacity. In response, prominent venture capitalist firms such as USV, Founders Fund, Hustle Fund, Inspired Capital, and Valor Equity advise their portfolio companies to either withdraw funds or diversify assets. So you can see how this starts to take Silicon Valley Bank's move to be able to get more capital by selling off stock to a large amount of capital is now leaving the company at the same time, creating a massive influx within. On Friday the 10th, the FDIC sent a release Friday to announce that SVB had been closed by regulators, which are now in charge of the bank's deposits. While the banking activities at SVB's 17 branches were closed Friday, the Silicon Valley Bank's operations will resume on Monday the 13th, and this time with the FDIC in charge. Due to just the massive influx of money that was going everywhere, basically overnight, you can't pay out all that money at once. So many people were trying to withdraw or diversify at once that all of a sudden they don't have the actual money on hand and they're gone. So the FDIC on Friday gets closed down by regulators, is taken over by the regulators, and now is going to be run by them for the weekend, basically. So sudden shutdown after a poorly received announcement about showing up its balance sheet, leading to panic among startups and venture firms. Some customers face difficulties even accessing their funds, processing transactions, and while regulators closed the bank and took control of its deposits, the collapse has raised questions about the future of venture debt and the implications of SVB's competitors. As the tech community grapples with the fallout, founders and startups are forced to reconsider how they manage finances and deal with risk associated with banking partnerships. If you're a startup and you're making transactions and your bank disappears, that's a massive problem. Can't answer, doing refunds is now gone, paying your bills, paying your office bills, your internet bills, even your payment processing. All of that is just on hold overnight. You just can't do anything about it. All your money that you needed to buy food for yourself, to get paid for yourself, all of that just boom, gone. Don't have access to it right now. Now, Saturday the 11th, in the aftermath of the bank's collapse, over 100 venture capitalist firms have declared their support for the bank, while others, like Founders Fund, Sequoia Capital, and Y Combinator, remain noticeably absent. Y Combinator CEO Gary Tan has initiated a petition urging Congress to take action, while Brex CEO Henrique Dubargas, that's butchered, but we're going with it, is attempting to raise over $1 billion for emergency funds for the loan. Regulators have requested that SVB employees stay on for 45 days, offering 1.5x their current salary during that time. The crisis has also affected Indian startups and major companies like Roku and Roblox, who disclosed SVB exposure in SEC filings. The UK arm of Silicon Valley Bank has been shut down, impacting up to 30% of UK tech startups and prompting industry representatives to seek government intervention. So it's massive, right? We have a bank that just collapsed. We have companies all over the world taking, not just, it's a US bank, but Indian companies, UK companies, US companies, Canadian companies. All these startups are all of a sudden on hold. Can't do anything for the last couple of days. And possibly in their mind, they're thinking all our funding's gone. What are we going to do? How do we keep innovating, trying to do these new startups if there's no money? To the point where even Roku, who is an established business, said in a filing that around $487 million were held at Silicon Valley Bank, which was literally about 26% of its available cash to them, which is I mean, it's wild to have that much in one place, but at the same time, like some of these massive companies, how many banks are there that you can trust your money with? And so I guess you leave them in there. That seems like a big risk to keep almost $500 million in one, but here they are. But you can see where this is like a major deal in the tech world at the moment. Then on Sunday the 12th, Secretary Janet Yellen announced that the US government will not be bailing out Silicon Valley Bank, but will help its depositors affected by the worst bank failure since the 2008 financial crisis. The FDIC will be reportedly holding SVB's remaining assets, aiming to conclude them, holding an auction for its remaining assets, hoping to conclude the auction before markets open on Monday. Meanwhile, the version of the bank in the UK is expected to enter insolvency proceedings, and the Federal Reserve has assured that all depositors in SVB, both insured and uninsured, will be fully protected without taxpayer loss. Basically, the the Federal Reserve is going to be bailing them out, but not at taxpayer expense, through the uninsured and insured, basically through the insured bank or whatever the heck it's called, their depositor, whatever. That's what they're going to be using to pay this all back. Then on Monday, HSBC has acquired Silicon Valley Bank's UK arm, ensuring depositors' money is safe and signaling government support for the tech and financial sectors. Following SVB's failure, regulators have closed crypto-friendly Signature Bank and First Republic Bank shares have plunged by over 65%, prompting trading to a halt. Regulators in Canada and Germany have frozen assets of local SVB branches, and the new CEO of Silicon Valley Bank assured clients that the bank is operating business as usual under a newly created FDIC-operated bridge bank. So, basically what's happened here as of Monday, our understanding is that a bunch of this fell apart. The UK arm is owned by a new bank now who's just going to clean up the mess. The FDIC is going to operate the US branch and call it Bridge Bank, and that's what's going on here. Then on Tuesday, we have Tim, who I'm not going to know his name right, so we're going to call him Tim Mayo. It's like Tim Mayopoulos or something. The new CEO of Silicon Valley Bank has urged clients to return their deposits to ensure the bank's survival. So what we're kind of learning here is the bank was helped enough that it's not going to be gone, but it does need the money back to like continue surviving. So that's what's going on here. Noting that depositors' actions will impact its future, and meanwhile, the shares of First Republic Bank, PacWest, and Western Alliance have recovered. The First Republic up by 57%, PacWest up by 76%, and Western Alliance up by 44% as the panic has lessened for SVB. Most banks are coming back from this. SVB is now going to be called Bridge Bank, but I think the major question we have to answer here is we obviously don't know everything yet. There's still things even happening today. Things happened yesterday. But the real question here is, how are we going to prevent something like this from happening in the future? How do we make sure that not one bank is doing most of the funding for tech startups? Because we can't say no more funding tech startups, because we need that to keep technology moving. We need that to be able to keep our tech advancing at the rate it needs to stay, in the US's case, to stay number one. There's no way to do tech without having these banks that are willing to try to back these companies. But at the same time, maybe only investors should be doing that. Maybe a bank shouldn't be putting all their coins in one basket. Maybe they should only be able to do a certain percentage or something of that nature. There clearly needs to be a change, because even though this process of this bank collapsing happened over a course of many years, or like a couple years, it seems, as more information's come out, the fact that it can basically all fall apart in one weekend where a majority of the damage happens that's a little scary. That's something that needs to change. So that's kind of our quick recap of Silicon Valley Bank up until Tuesday. Yesterday there was news. I didn't get a chance to go through it all. I'd already been kind of going through and making this quick go through of this. So hopefully that was enough to keep you guys up to date.